Home sales prices continue to fall. Price drops accelerated
to steepest rate in 16 years. New York. Sales of existing homes depressed by turmoil in credit markets fell for a sixth straight month in August, pushing activity to the lowest point in 5 years, an industry trade group said Tuesday. A separate report showed that the nationwide decline in home prices has accelerated, posting the steepest drop in 16 years. Home prices have fallen by more every month since the beginning of the year. Sales of existing single-family homes dropped by 4.3% in August from July, the National Association of Realtors said. Sales dropped to a seasonally adjusted rate, 5.5 million units a year, the slowest pace since August 2002. The housing market has been battered by the steepest downturn since at least the early 1990s. Problems were made worse in August by turmoil in credit markets, reflecting new worries about rising defaults and subprime mortgages. Between concern about the job market and worries about the overall economy, consumer sentiment also has taken a hit. The conference board says its index of consumer confidence fell this month to the lowest level in nearly 2 years. The turmoil in the housing market is bringing steep price cuts. An index of 10 U.S. cities fell 4.5% in July from a year earlier, the biggest monthly drop since July 1991. The further deceleration in prices is still apparent across the majority of regions. A broader index of 20 cities fell 3.9% in July over last year, with 15 of 20 cities reporting that prices fell. The 5 cities where prices are still rising: Atlanta, Charlotte, North Carolina, Dallas, Portland, Oregon, and Seattle have reported growth is now slowing. Atlanta and Dallas are close to moving into negative territory. An economist at Yale University told lawmakers in written comments last week that the loss of a boom mentality among consumers poses a significant risk of a recession within the next year. The housing slowdown and decline in credit availability have triggered worries that the economy could go into a recession, spurring the Fed to act. Meanwhile, the slowdown in new home construction shows little signs of letting up. Lennar Corporation, one of the nation's largest home builders, reported a $514 million loss for the latest quarter on sharply lower revenues because of falling home prices and hefty charges to write down land values. Home builders have been forced to absorb charges to write down the value of homes they cannot sell or to forfeit deposits on land they no longer want to buy. Lennar said it has cut its workforce by 35% and expects continued job cuts to come in the fourth quarter. It is already well documented that the housing market has continued to deteriorate throughout our third quarter. Heavy discounting by builders and now the existing home market as well has continued to drive pricing downward. Consumer confidence in housing has remained low and has become lower, while the mortgage market has continued to redefine itself, creating higher cancellation rates. More to come.